Well, ultimately, a budget is all about taxes, and we have an excellent tax panel here with Mr. Dinesh, Kanabar, Mr. Sudhir, Kapadia, and Rajeev, Dimri, and our colleague Surabhi, who has done a hell of a lot of work on what is expected on the tax front, is also with us. Take it away, Surabhi.
Lata, thank you so much for that, and good morning to everybody. Good morning to the panel. Yes, I think the expectations are running higher than usual this year, just because the middle class has been saying the corporates got their share. There was PLI for, manufacturing and other incentives for sectors. What is there for us? And I think that's why the middle class is really holding their breath this time around. But let me straight away throw it to the panel, Mr. Kanabar, and why not, right? When was the last time, I don't remember in recent memory, where the consensus is this government will exceed its tax collection targets on direct tax. GST numbers have been fabulous. So why not? Why not go ahead and give out this little gift to the middle class?
Anyway, lower bracket, will it be raised? Yeah. Will the ceiling be raised?
So the three parts to that question, Surabhi and Lata. First is that you're looking at exemption limit. And I know that the official BJP version is that don't increase the threshold limit, because if you do that, people don't file their returns, they go out of the tax net, and it is better to monitor. But I do think there is a need to relook at the threshold limit, only for a simple reason that inflation has been there eating into people's pocket, and we need to just recognize that's one part. Second is the middle level. So can we have a 15% bracket somewhere between 10 and 20? And can there be that limit from 7.5 to whatever, which is at a lower rate and which will again leave some more disposable income in the hands of the middle class? One thing which we tend to forget, and there is, I don't see a reason why we should forget, that is the top class, because we have maximum marginal rate for individuals going right up to 42%. There was this introduction of a surcharge, and I have gone hoarse sort of saying that surcharge cannot be in perpetuity. It was for a particular purpose. We have buoyancy in tax collection. Why should it not be that the maximum marginal rate should be at 35%, which is, we have been competitive on the corporate side. I cannot see any valid and good reason why we should not be equally competitive on the individual side. And I would really wish that the surcharge is reduced and we get the maximum marginal rate tax down, because beyond a particular threshold, if we exceed, then there is a tendency to say, can we do something to not pay taxes? We would rather have 35% rate of tax, and we'll see actually a buoyancy in collection.
I remember that budget. We were all sitting here together, Mr. Kanabar, when that surcharge 42% hit us. I think there were a couple of other corporate voices as well, and you'd almost see steam coming out of their ears, when this level, I mean, of this disbelief that the market had. But let me get Sudhir Kapadia's view into the picture as well. Mr. Kapadia, good morning. Your thoughts, A, will there be any tinkering as far as the tax slab is concerned for the middle class? And do you think it would mean much, or is it just for face value, given that we have an election upon us?
I think I would first like to react to the last comment of Dinesh. I do have a difference of view there, for the simple reason that a race to the bottom on personal income tax, especially for higher earners, will not help India. Who will you compete with? I mean, UAE is still 0%. For example. So I think that battle is a very different battle and a different discussion. And I think there are many non-fiscal considerations also when people look at tax arbitrage. So I agree that people are mobile and capital is mobile. I think India can do a lot as far as capital is concerned to attract more capital. Therefore, there is greater expectation that something better can be done on capital gains tax, for instance. In an election year especially, the same point I would turn it around and say, for the government to actually reduce the rates for the highest tax bracket, I don't think is even gives any political capital. Coming to the lower rates, I completely agree, and we discussed that yesterday, Lata, as well, that in fact we have suggested, we have given a very specific recommendation to the government to go with the lower rates already prescribed in the alternative tax system, the minimum tax, give us some deductions which are necessary for education and for health. And that is a sacrifice in revenue. I just gave a number of 10,000 crores as just, I don't have the basis. But that much I think the government can afford, given also what the economic survey says, given the tax buoyancy which Mr. Bajaj just earlier on the show also spoke about, and the fact that government has been able to over-deliver on tax revenue. So yes, some relief on personal income tax at the lower levels, more as a relief for against inflation. As Mr. Bajaj said, it may or may not boost consumption. That's factual and more analysis is required.
Right,
But I don't think at a higher rates there is any scope.
Mr. Kapadia, sorry, two things you said. You said on the higher tax-paying brackets, race to the bottom, not advice, and then you said capital gains, maybe something can be done, harmonization, etc. Is that what you said?
Because on capital gains, so there are two things, right? Individuals are mobile and capital is mobile. I'm trying to say that as a policy, India can still do a lot on making capital stay in India and attract more capital. Because if you see the thrust of the government, even through the COVID,
No, Mr. Kapadia, that is absolutely
more
fine.
on the supply side.
That is absolutely fine. All I'm saying is, are you proposing capital changes to the capital gains tax regime?
Yes. So we have suggested that two things we have suggested. One is that we should harmonize the holding period for all assets, movable assets, as it is in most countries, and the fact that unlisted shares, for example, you still need to hold for 2 years. We need to boost startups more. There is no reason why unlisted holding period should be 2 years. That can easily be made 1 year. It will not result in significant revenue loss, but it will help in greater velocity of investment. So I think rationalization of holding period certainly is something which can be expected.
Yeah, that I think would make matters simpler just from a filing and compliance point of view as well, just an understanding point of view for investors. Rajeev, I just want to dial back to the middle class and the whole chat about personal income tax for a second. How does this play out? Because on one hand, this is a government that has been talking about lower tax rates, doing away with deductions, streamlining the regime so that people really pay up and it becomes simpler. But that lower tax rate regime, zero deductions, didn't quite work. On the other hand, there's a clamor for more on ATC, more on ATD, more on housing. So how does the government balance this, and which way do you think perhaps could they tilt?
I mean, I'll come in with a slightly different point, but staying with the theme. The tax collections, we all know, have been far better than what anybody expected, and it is on the base of some solid data, IT systems, better tracking of transaction, all the work that has happened, particularly around GST. The economic survey also recognizes the knock-on effect that because of the improved, system and data gathering on GST, it has had a better effect on the income tax as well. Now that we have the taxpayers done what they should have done and have, we got the tax collections, it's time to reward the taxpayers. Now, whether that is in terms of addressing some of the demands that are coming in, in terms of exemptions, deductions, lower rates, that's one side of it. The second side also is that we need to dial down on some of the enforcement mechanisms that, the powers of the tax department. We have decriminalized many of the laws and many of the sections in the Companies Act. I think something similar is needed on the income tax, more particularly on the GST, and therefore, the reward mechanism can be in terms of lower taxes or better rate structure so that the maximum marginal rate is reduced and is reached much later. One is the rate of 42% that Mr. Kanabar talked about. Second is how quickly taxpayers get to that. The difference between the slabs is not material. Maybe the slabs need to be expanded and broadened. So the two mechanisms.
Mr. Dimri, we have to get back to you.
Okay, well, I think there's some issue with that audio there, so we'll come back to Mr. Dimri. Just a word on the market. It's holding up with gains of around 125 points, so do keep that on your radar. The high point of trade was about 17,815. We're at 17,786, so thereabouts.
So, Neha, just one thing. All the Adani Group stocks are now, actually all of them without exception are in the red. Adani Total, for example, and we should do a quick run through, is down a full 10. That's the daily limit on that one. Ambuja is down about 1. Adani Ports is down, but nothing much. 0.75% here. Power is down 5. Green is down 4. And Enterprises is down about 3%
I did a quick calculation of the market cap of all those companies, and it's coming to TCS's market cap. That much it's fallen.
That's the destruction.
Yeah. Sorry, go ahead.
Mr. Kanabar, I just wanted to draw you in on the point on capital gains that Sudhir was also making, because that's the big one for the market, right? That, as well as any changes in the buyback tax regime. DDT regime changed a couple of years back. Now, on capital gains, if there is a change, are you in sync with what Mr. Kapadia is saying, that only change the holding periods, let the taxes be where they are, and also a word on buybacks?
Yeah. So again, two parts to that. So far as the holding period is concerned, it does need to be rationalized. And obviously, the rationalization has to be to ensure that the longer periods actually are doubted into shorter period and not the other way around. The last thing we want is the 1 year limit on long-term capital gains for equity to be enhanced. That's not the right way to approach the market at all. So I think sort of bringing down the holding period would be very, very welcome. And I do, of course, have a difference of opinion with Sudhir on the 42%, because that surcharge also really impacts the capital gains tax. Because and I do think that we need to relook at all of that.
So make unlisted equal to listed, bring the holding period down to 1 year, and then apply capital gains.
That's right.
But don't people say, how is 1 year long term? Was not that the argument, that therefore make short-term capital gains to 2 years?
Yeah, so I think, again, we need to be conscious of 2-3 things, Lata. One is a rational approach to say, is 12 months long, short? Okay? There are countries which don't have capital gains tax at all. Okay? So there is a huge amount of thing going on there. The other thing is that the capital markets need to be buoyant because there is disinvestment, and I haven't heard too many people speak about it. But the government targets on disinvestment have not been met. I'm very sure this year again there will be a steep disinvestment target, and if that is there, if our capital markets are not buoyant, how will you be able to accomplish them? And I think not changing the holding period from that 12-month period to make it longer is very essential aspect of what the capital markets will look forward to.
That's on equity. I mean, then debt is a whole new ball game. You hold debt mutual funds, you get indexation benefit after 3 years. That's long term.
Yep.
But you're directly dabbling in, T-bills or government securities. It's 1 year. So what would be the right way to go for debt? Maybe just a quick word from you and the others on the panel as well.
So before that, you also asked a question about buyback tax.
Yeah.
And I think that's a it's a question of be careful of what you ask for. So on the dividend side, what happened is we had dividend distribution tax, and when the dividend tax moved to individuals, they started paying a much higher tax. Again, buyback. If the buyback tax is substituted for a capital gains tax, it would be very, very welcome. But if a buyback is treated as distribution of a dividend and put akin there, then we will have a huge amount of pushback on that.
Another 42%.
And we need to be very careful what we are wishing for. I think Mr. Bajaj made that comment when we met up with him and said, you guys came back and said, please convert dividend distribution tax. We did it, and now you are complaining about it.
Okay, we have to take a short commercial break, so we'll be back in just a bit. But coming up on the other side, we have live coverage from the CII panel. Shireen is standing by with a host of guests to discuss their budget wish list, so do stay tuned into that.